Good morning, everybody, and welcome back to Crypto Warehouse. My name is Mike. Today is, believe it or not, the 15th of May. Is it the 15th of May or is it the 16th of May today? It is the 15th of May today. It's 11 o'clock Central European time, 10 o'clock in the UK, and we have, as always, a busy show today. We're going to go through Dave the Wave's Bitcoin prediction. Yep, Dave the Wave. We're going to go through AIDA, Cardano related news article. We're going to have a look at GME or GMEME pump, as it's been called. We're going to have a look at what Lubin has had to say about the SEC and Ethereum. We're going to look at a project called Liquity. Now, I have practiced that. It is called Liquity. And then we're going to look at the jail sentence for the Tornado Cash developers, 5 years. What do we think of that? Good morning to everybody that's in the chat. Good morning to Only You, Hidden Agendas. Mags is here. Peter is here. I hope you're all doing well. What I am going to do for Only You and Peter, you've both sent me very comprehensive portfolio lists. So what I'm going to do today, and no one's going to know about this, I'm going to make two private videos, one for you and one for Only You. It is going to take me a very long time to type up the comments. It's going to be a lot quicker for me to walk through it in a video. So I'm going to make a very quick video and upload it and send you the link. You're the only person that's going to see it. So don't panic if you see a YouTube link with your information on it, because it's going to be a private video. Much easier for me to do it. Anyway, back to the show. So what we're going to go through today is hopefully also cover off the theme of the show today is CP Sky Eye, which is the CPI data is coming out today. And this is going to determine where Bitcoin is going to go over the next couple of days. They are trying their hardest to wangle CPI down. They've removed coffee from the CPI data. They're just trying to get that number to come down, because the second the number comes down, the second they can cut rates. So today I expect it to come in on target. Now, how the market reacts on days like this is crazy. We're going to see wicks up, we're going to see wicks down. It's going to be the most important CPI number until the next one. So bear in mind, we could see some volatility today. You could see Bitcoin at 63,500 and you think the markets are going to pump, and then suddenly we've crashed down to 61,000. I do not advise, and it's not financial advice, I do not advise trading on CPI or FOMC meeting days. It's really volatile. You can hedge your bets, but that's nothing more than gambling, in my opinion. So just be very careful when it comes to CPI data. Very, very careful. Now, what we're going to do before we do that is have a quick look at the markets, because Bitcoin, we went down to 61.2 last night, I think. The day before we were at 63, and there's a lot of chop in the market. And what I mean by that, yesterday I was watching another streamer, a TA streamer, and we just, on the 1 minute and the 5 minute time frame, we were just getting rejected off 62, 61, 8, 62, and it just kept happening over and over again. And the markets are just really choppy, and I think that's a reflection of traders not knowing the direction the markets are going to go in. We've had the euphoria of the ETF, we've had the euphoria of the halving. We're now just waiting on the CPI, on the CPI to come down, because once CPI starts to come down, then risk on assets become desirable again. And we're just in this chop. It's like, you know, we're in this kind of no man's land at the minute, and we're just waiting. However, the markets are still here. They're not going to go anywhere. Market cap still 2.27 trillion. Volume, again, 67 billion. That was way up over 110 billion during the beginning of April. Bitcoin dominance has now gone back to 54%. Remember that took a bit of a hit. That was down to 52.8, was it? 53 and now 54. So Bitcoin dominance is moving up. And if you watch the stream on Monday, you will know why you need to keep an eye on that. If you didn't see that, make sure to go and check out that show. So Bitcoin is 62.1, Ethereum is 2,900. Gainers and losers, again, we've seen some serious meme coin action over the last 2 days, since Sunday maybe. Flocky is up, Pepe is up, Bonk is up. We've got Thorchain up a little bit, Wormhole dropped. Wormhole's got an issue in the fact that it airdropped so many tokens that the price action for a long time is going to be choppy again. You find that with a lot of coins that are airdropped, whether it be via a launch pool or directly to your MetaMask wallets or whatever, you see this kind of action where the price will rip and rip and rip, and then it will just keep dumping as the coins are sold off. So Wormhole will probably come out the other end of this, maybe in a week or two's time when the majority of people have sold off, and then it will find a natural price. It's happened with all the tokens. If we look at the Solana tokens that we've been monitoring over the last couple of months, it's happened with Zeus, it's happened with Camino Points, it's happened with Dupe, it's happened with Hive. They have a lot of volatility as people buy and sell based on the airdrop, and we're going to see the same thing with Wormhole. So lots of meme coins in the top gainers, and again, losers, Athena is down, Celestia is down. Now Celestia is taking a hammering, and I'm not going to click on it, but I don't know if you remember way back when I was talking about Celestia, and I said what's going to happen to this coin once the airdrop season finishes, because that, in my opinion, was why this coin was going up towards $20. The airdrops, it's a new chain, there's new projects launching, they're doing, you know, there's lots of token farming going on there. We're now down at $8. Where are we going to see the bottom for Celestia? Is it going to keep going down? Is it going to break $1 billion? Don't buy into a brand new chain just because people are buying the coin to farm airdrops, because when those airdrops finish, they're all going to dump the coins. And are we seeing that with Celestia? I don't know. Stacks is down, Audi is down, and there are some very good bargains to be had down here. Immutable X at $2. That's my buy price for Immutable X. So I have been buying Immutable X. Optimism is a great chain. That's down 12% over the last week. Stacks is going to be a good project. I'm not a fan of, obviously, WorldCoin, but there's some nice coins in the bottom there that have retraced a little bit. You could pick up some bargains at. Lido isn't ever going to go anywhere, but that's highly attached to Ethereum. So if Ethereum dumps on the news that they're not getting the ETF, then Lido could also follow suit. Near below $7. I was buying that when it was around $6, $5.80, $5.90. I think that's going to be a great project. So there's some good bargains down there. Sui looks like it's running out of steam. That's down under $1. First time I've seen that in a while. So there's lots of coins there that you could go January shopping in, if you like. Right, let's get on with some X-Files and see what we have to talk about today. There's a few of these, so I'm going to go through them at a reasonable pace. Good morning, Peter. Good morning, only you. I've sold all of my coins at a loss, but I happen to okay, coin. My coins I used to hold were going nowhere, and I thought it was a waste of time for me, but I can always get back in. Hi, Kabir. Good morning, and good morning, Daniel. I mean, the thing is, again, buying and selling in the market is staying on the train. Selling to fiat is getting off the train, and I wouldn't personally do that right now. I would buy Sol, or I would buy Ethereum or Bitcoin, whatever it might be. Okay, then the State of Wisconsin Investment Board discloses it holds almost $100 million of BlackRock's spot Bitcoin ETF. Remember what I'm going to say? You're going to see these every day. I'm going to show you these every day because it's important to realize that when this train gets going with all of the ETFs, you want to be on the same train, and they're all off. Now, again, the title of this show today was going to be Don't FOMO In, and we're going to cover the GME pump later on, but that's to do with the actual meme coin itself. Now, The Vanguard CIO weighs in on the GameStop issue. Now, for those of you that don't know, there is Wall Street Bets, and they're a Reddit group, and they pump coins, randomly pump coins. Now, it's not a scam because they're entitled to do what they want. They are not doing anything illegal compared to financial magazines, but what they're doing is they're wiping out the shorts, which are held by the hedge funds. And it's not long term, this isn't good for the markets. But again, what you've got to understand is that he sums it up perfectly in one of these sentences here. He says that this isn't investment, this is speculation, and that sums it up. And you have to understand, when you invest in crypto, the majority of what you invest in is speculation, especially if you're buying small caps, especially if you're buying projects that haven't launched. That's speculation. If you're in your company based on the profit and revenue of your sandwich shop. If you come to me and say, I'm going to open the greatest sandwich shop that's ever lived, and I'm going to open it in the centre of Mayfair in London, and we're going to charge £85 a sandwich, and we're going to make a fortune, that's speculation, because there's nothing there yet. So you're buying into the future of that business. The same way, and I understand what you're going to say, in some ways you're buying into the future of the existing sandwich shop, but the risk of the one that isn't, I'm not going to rant today. I'm going to make a promise. I'm not going to rant, but I am going to make some strong points on this. Bitcoin network activity continues to decline. More importantly, Bitcoin whales seem to be taking a breather, with the number of large transactions also decreasing, as shown by the data below. Again, this was put up yesterday. No, this was put up on Monday evening. What does this mean? It means that people are having a break. You cannot go up and down forever. And I think psychologically, you can become exhausted by being a bear, and you can become exhausted by being a bull. That's why nothing goes up forever, nothing goes down forever. We've had our 20% retracement from 74,000. We're down. We are sitting at 61, 62, 63, and we're having a breather. As I was saying about the chop before, we need a direction, and the bears and the bulls both seem to have given up, and they don't really want to make the next move. Because if the bears push the price down and keep shorting Bitcoin, and this CPI data comes in today and it's positive, then they're all going to get wrecked. The bulls are the same. There is a chart that shows you the open positions for shorts and longs, and that kind of gives you an indication of where the market is going to go. Now then, we talk about happy coincidences or not, as the case may be. The GME breakout and YOLO of 2021, that was 3 years ago, took place 1,102 days after the peak of Dogecoin in 2018. The GME breakout of 2024 took place 1,100 days after the peak of Dogecoin in 2021. Is that a coincidence? No, it is not. There are no coincidences in finance like this. It's not a happy coincidence at all. These things happen in cycles. Remember, it doesn't mean that somebody purposely chose 1,100 days. It's the stage and the cycle of the markets. And these are not happy coincidences. They want you to believe they're happy coincidences, but they really are not. Now, I hope none of you watching have already bought GameStop shares. That's all I'm saying. Last one then. For the first time ever, on May the 12th, Solana generated more total economic value than Ethereum in a single day. Now, what does that mean? Two things. Ethereum has slashed its fees. We spoke about this a month and a half ago. Ethereum slashed its fees. If you slash fees, you slash your income. So Ethereum's income has come down. Solana's income has gone up. They've met in the middle. Solana is generating more money more economic value than Ethereum. Now, this could be a blip, but remember, this blip 6 months ago wasn't even on the table. We looked at DeFi Llama maybe in January when we were going through the DeFi Llama charts, and we were showing you that even though Solana is more popular, has more transactions, has more DeFi, more NFTs, all of that, it still doesn't generate anywhere near the revenue of Ethereum. So Ethereum is always going to be richer. Richer means more developers, more advertising, more infrastructure. They've slashed their fees to the layer 2s, they've slashed their own fees, and the activity on Ethereum has slowed down. Solana has just got stronger and stronger and stronger. Then we've had the meme season, we've now got DeFi and airdrop seasons, we've got the meme seasons coming back, and you're starting to see Ethereum start to fade. But remember, we're looking at Ethereum at the nadir, at the base, and we're looking at Solana at its current peak. So even when Solana is going hell for leather, it can only just catch up to Ethereum when Ethereum is having a very bad period. So don't take this as a flippening and Solana's going to replace Ethereum. It's not. But it shows you how far both have moved towards each other over the last 3 months. GameStop shares were always pumped and dumped. Absolutely. 100%. And they're talking on TV about how it's unfair, how it's illegal, how it shouldn't be allowed to happen. They're sitting on a show that Jim Cramer stands there and tells you to do something. And had you done the opposite of everything he said for the last 2 years, you'd have tripled your money compared to what the advice he's given you. So people in glass houses certainly shouldn't be throwing stocks and shares around. That's all I'll say. So this crypto expert called the Bitcoin top in 2021. Now he's calling the bottom in 2024. And he's probably got one of the best names, if not the best name, in crypto. And that takes him even above Crypto Warehouse. Dave the Wave. Now, Dave the Wave sounds like a surfer from Burnley. Okay, Dave the Wave. However, he predicted the top in 2021, so either he was very lucky or he's very good at his job. He predicted the top, and he's weighed in on where he considers the market is going to be. He also said that the bottom is in for Bitcoin. Good morning to you, Diablisky. I hope you are well. In the analysis, which was posted on Twitter, the crypto analyst posts a number of indicators that show that the Bitcoin bottom has already been reached. One of these is the MACD, which the analyst reveals is still far off from the levels from the last bull market. In addition, the MACD is still trending below this level. The crypto expert points out that the crypto market is more mature than it was. Given this maturing market, Dave the Wave stated, I'm not going to do an accent, don't worry. It wouldn't at all surprise me to see something different develop pattern-wise over the longer time frame. The analyst suggests that Bitcoin's low is in, and given the price had fallen to 57,000 a couple of weeks ago, he suggests that this is as low as the price will go. If this holds, it's possible Bitcoin will not fall below 60,000 before it resumes its bull rally. Now, I had 60,666. That was my line in the sand, and I think we touched that a couple of times and didn't fall below it recently. I think that's the bottom. Brogan thinks that's the bottom. The Oracle, should I say, thinks that's the bottom. So 60,000 is probably going to hold. I know we've had people in chat calling for 50,000. The bull market, its support band is at 56, 57,000. It's going to take a monumental effort to push us below that. And that's why I pay homage to that line. The moving average is not our last line of support, but a great line of support. And we hit it on some charts anyway. And when we came back up, that 60,666, which was the goal previously, became support. And I think we held the line there. So Rect Capital has said that Bitcoin price will still cross 100,000 as long as the price is able to break above 63,000 and hold that level. Now, very quickly then, let's move on. We're already 20 minutes in. Now, I said yesterday that although we were at 63,000, one swallow doesn't make a summer, I think that was the term I used. And I think the issue is that we're in this chop and we've kind of come down and had this period now where we've been very indecisive. And even though we're at 63,000, I said we needed to get above 64.3, 64.2 to get back into the next range. And then after that, we need to move up to get into this range, which is 67,000. So we've got some targets on the board, 64, 67, and then the big one at 72. But we're a long way from that yet. Now, there are people saying, again, that we have got head and shoulders. Lots of people saying that's been invalidated, depending on what time frame you look at. Depends on whether you agree with either or. Now, if we are, then we would expect to see a fairly quick move up to here at 67,000. What would be an indication that we're going to break up to 67,000? If the CP Sky data comes in as 0.1% less, then I think we're going to rip up. If it comes in equal, we're probably going to chop around here for a while. And if it comes in 0.2, 0.3% higher, then do not be surprised if we do fall down to 57,000 again. And maybe we have a quick wick down before coming back to here. So again, we don't know what the CPI data is. Normally, in about 2.5 to 3 hours from now, we will start to see some, volatility. People trying to front run the price, the longs and shorts coming in. That's where you might see us wick to 63, 63.5, back down to 61.5, and it could just be an absolute mess. So just bear in mind, today is not a day to trade, in my opinion, especially before that announcement is made. Some analysts are calling for 54 to 48. Down here, if you're looking at lines down here, then you've got 43 and you've got 52, but is the CPI data that's going to come in, is that going to come in 0.1% either way? Is it really going to come in at 4.5%? No. How do you move the price of Bitcoin down another $15,000 from where we are? I don't see how it can be moved down. That's the issue. The thing is that the spark for me at the minute is a spark up. That's where the spark is. We've had the bottom and we've come down, and now we've wobbled around this level here. We didn't break it, and now we're just sitting at 62 waiting. What's going to cause us to go in either direction? The CPI data comes in on target. The CPI data comes in hot, CPI data comes in cool. They've removed coffee from the CPI. Now, apparently, coffee doesn't need to be taken into account for inflation. How do you even get to that stage? Are you just going to start picking things out of baskets now? Right, we don't need bread. We're not going to include bread. We're not going to include milk. We're not going to include coffee. Why would you have coffee in inflation? It's ridiculous. They're fudging the numbers. And if they're going to fudge the numbers, they're going to fudge them to suit the political gain of the current government. And that means that it's going to come in lower, in my opinion, and we're going to move up a little bit. The banking crisis is a black swan coming. We have been looking for a banking crisis for a year and a half. What happens every time a bank collapses in America? Every time a bank collapses in America, They get bailed out by the federal government, and somebody like Goldman Sachs comes in and buys them. So who benefits from a banking crisis? Goldman Sachs benefits. The government benefits because the government just prints all the money that they've lost. I don't think we're going to see a large bank go bust. And large by American standard, not large by our standards. So, last week we had a bank go bust. Nobody heard about that. The week before we had a bank go bust. I think we've lost 8 banks in America this year. It's a concerted effort in America to remove community banks. They don't want them. They're competition. Goldman Sachs, BlackRock, all of the major financial institutions that own or are big banks want to get rid of all of the competition. How do they do that? They let them go out of business, and then they buy them, and then you suddenly end up with a Chase bank account or a Goldman Sachs bank account or whatever bank account you've got, Bank of America. They don't want community banks. They don't want 10,000 banks in America. So this banking crisis is fabricated. The longer these rates stay higher, the smaller banks are just all going to go to the wall. But they're all going to be bought out by big central banks, and that's going to make them happy. They're going to gain millions and millions of American customers. And when it comes down to 4 or 5 major massive banks that own 80% of the market, they will rig the rates and they will create a monopoly. And at that point, you won't be able to stop them. How do you stop them? Where is the political motivation to go against the people that pay for your political campaigns? So I think the banking crisis is fabricated. I didn't think it was fabricated a year ago. I do now. So Cardano founder makes curious crypto AI statement. He's actually in here twice today, I think. Or did I just include? Did I not? Maybe I didn't include that one. So Charles has published a tweet about AI influencers emerging on social media. Well, I'm certainly not an AI influencer. Anybody that talks about Dave the Wave certainly can't be an influencer. So then, Charles has published a tweet. He launched a poll about AI and cryptocurrencies on his official account. The Cardano community was surprised at this idea, though, posting multiple replies to express their reaction. AI is blurring reality from fantasy. Therefore, Hutchinson rolled out a poll to ask his numerous community of followers on X where he should set up a crypto OnlyFans for an AI version of himself doing crazy stuff. I didn't know it was going to take this turn. I forgot about this. The answers are yes, 19%, super yes, 16%, yes, but Caddle Daddy, whatever even that means, 29%, and no, 35%. 3,500 users have taken part in this joke survey. The tweet has gained 59,000 views so far. Now, I remember seeing this, and yeah, he has got a good sense of humour. He also added a link to his X post, which leads to a YouTube short about a social media influencer and a model generated by AI. This AI-made girl has pink hair. She earns $11,000 a month, and her name is AI Tana Lopez. Now, again, I'm not going to go down the route of talking about OnlyFans or AI in here, but suffice to say, we're getting to the point where lots of platforms are starting to consider what direction they're going to allow AI to go with. So if you look at Twitter, if you look at Facebook, Instagram, YouTube, where do you draw the line on AI? Do you allow AI influencers to be created? Do you allow AI videos to be made? Would you prefer to listen to an AI crypto streamer over a real one? Where's the line drawn, and who decides where that line is drawn? That's a huge issue and a huge question, because, again, when we talk about crypto and we talk about the internet took whatever it took, 20 years. Crypto has so far taken maybe 5 or 6 years. It's the fastest growing technical advancement in our history of humanity. AI is going to be even faster. So in 4 years' time, the chances are most customer service staff will be out of a job. There'll be no customer service work. Telephone customer service, email customer service, online chat, it's all gone. They're all going to be gone. So AI is going to replace a huge chunk of people very, very quickly. Where do you draw the line as a country? Because productivity will go through the roof because you are making more stuff. But you don't pay AI robots a wage. So there's no tax, there's no social security. It's a huge existential threat to governments. Productivity goes up, but revenue goes down. What happens? And I think Charles, quite rightly, tongue-in-cheek, is asking the question. But it's for China, America, the UK, who have formed this group with Elon Musk to decide where it goes, with Sam Altman. Sam Altman wants to create AGI, Artificial General Intelligence. That's what he's aiming to do. And that is the Terminator-style problem. So I don't know what the answer is. I'm not in that field. But I do think that having AI trading bots or AI banking assistants, AI customer service, it's going to benefit business. It's going to benefit you if you're not working in those jobs. Now, Cardano, very quickly then, we covered this last week. It's in a great accumulation phase. Everybody is calling Cardano dead. And again, if you look, we've done nothing but bounce around and bounce down. Now, again, if you look at when the negative news started about Cardano, I believe the negative news, because I've been covering it on here with you guys, I believe the negative news started over here. Now, at that point, we were bouncing around here, and then suddenly, every crypto news channel started talking negatively about Cardano, and we broke down. Now, is that a coincidence? Do you think that was preordained? Do you think that was planned? I don't think Cardano is a bad chain. I don't think it's a zombie chain, which it's been accused of being. I don't think Charles fits the narrative of what people in suits want from a chain. I know Vitalik is the same. Vitalik's days are numbered, but Charles doesn't fit the narrative. He fights against the establishment, so the establishment is going to fight back. And this is what the establishment does to you. It sends you down. I think when the attention's moved away and people stop footing Cardano, Cardano has an awful lot of stuff to come out over the next couple of months. 2024, remember, is the year that Cardano connects to Ethereum via, I believe is it Arbitrum or Optimism? They're building a connection between the two. So if you're on Cardano, you can play games on Ethereum layer 2 and you can do DeFi and whatever it might be. That's coming this year. This year is the most exciting year for Cardano of the last 3. Does the price action reflect that? No, it doesn't. Does the press negativity reflect that? Yes, it does. So, do you believe the people who are paid to make articles about Cardano, or do you believe what's being built? We look at the charts, we show you how many people are building on Cardano. We show you it's always in the top 3 chains being built on, and yet the price action is down here. Think about it. It doesn't add up. I'm going to say the same thing about Matic if we talk about Matic. Don't fade Cardano. This is a good price to get Cardano at 43 cents. I don't think it's going to do a Litecoin. Sorry, Tariq. But I do think you should be looking at it, especially look at their up-and-coming launches. It's not a good time to fade Cardano, in my opinion. Now then, moving very quickly on. We've only got 25 minutes left. We've got loads of the show to go. Good morning, Tariq is in chat. Remember, if you are new here, smash the like button. We are almost at 130,000 followers, so also give us a follow. 200,000 by the end of the year, or I will eat my hat. So Solana meme coin GME pumps 460% in a day as Roaring Kitty reappears. Now, if buying GME stock wasn't bad enough, there is a GME meme coin and it's gone up 460%. And as I said, the title of this show today was Don't Stop FOMOing In, okay? I think I've even got the chart. Have I got the chart for this? I have, yeah. Right, I'll bring the chart up as well, just so you can see what I'm talking about. Let's go over here and show you the chart. So this is GME stock. No, that's not it. Hang on. Let me get you the right one. Is it that one? Maybe. I can't remember which one it was. There we go. So that's probably the worst example. There we go. Okay. So we'll bring that up very quickly. I'll get a better chart in a second. So there was a GME meme coin created a long time ago. I think it was six, 9 months ago. And it's got no correlation whatsoever with GME. It's a meme coin created to support this Wall Street bets movement. So GameStop went up 120%. Its shares were frozen because the markets were saying it was moving unnaturally, but nobody can stop crypto. So this pumped. So the GME meme coin, which borrows the stock ticker, has no official affiliation with the company, traded more than 460% higher on Tuesday. The meme coin's significant gains come after GameStop stock posted a triple-digit rally after Keith Gill, who's the Roaring Kitty. He posted in the first time in 3 years, posted on subreddit. While the general market continues to drift off into the summer, GME has emerged after a long slumber, pumping 80% yesterday off the back of Roaring Kitty. So the stock is up, but again, this has nothing to do with the performance of the company. And again, I don't give financial advice. You want to go and buy what you want, go and buy what you want. But buying a stock because somebody called Roaring Kitty told you to go and buy a stock in a company that doesn't make any money, it's just madness. And buying the meme coin, which again has no correlation to anything, is just, it's all going to come crashing down like a pack of cards. So the stock went higher, the made up meme coin went higher, and I need to go and get you a better chart than this, because this doesn't give you the right vision. Now, I did find it yesterday. The problem is it's just been listed on so many of these coins. So again, I can't sit here and tell you how good or bad meme coins are, because they're all as bad as each other. They're all speculation. But it's going to come down again. Most meme coins go up and spike and retrace dramatically for a period of 6 months until you get bored and sell at the bottom. Then, when the whales have accumulated enough of the coin at near zero, they ramp it up again and pump it 800%. You buy again at the top, they sell at the top, it goes all the way down, and you buy at the bottom. They buy off you at the bottom again. GameStop coin is not going to be any different. And I know I talk about, where's the community behind GameStop? I don't see one. It's just a meme coin based on the stock. When you look at Bonk and its community, when you look at Crow with Knife and its community, they have communities of people that support the project and the idea. This is just a word. It's a name that happens to be the same. That's not the right one, I don't think. It just happens to be the same name. And that's where my issue is. I don't know whether we're going to get the actual one. I don't think we are. Doesn't matter. The point of the matter is, in my opinion, you're going to get burnt if you go around buying these stocks. And I'm only saying it because I don't want you to lose your money. That's it. And it's all well and good saying, well, this is just as good a meme coin as Bonk or Pepe or SHIB. No, it isn't. Those have tens of thousands of people supporting the project. This doesn't have anybody. It's a word. Ethereum Classic ripped in the last bull run. Why? Because people saw the price of Ethereum at $3,000, and then people saw Ethereum Classic at $2 and said, oh, Ethereum Classic, it must be the same thing. I'm going to go and buy that. And it went from $2 to about $30 because it had the same damn name. I mean, that's the problem. One of the problems, should I say, with decentralization is people who don't know enough end up getting burnt by buying the wrong things. You see it all the time where the same name coin will be bought and it will be a scam coin, but it sets itself up as that name to scam people. And that's the issue that there is in crypto. There's no oversight because it's so decentralized. It does have its downsides, and its downside is people who come to crypto can be burnt because they buy the wrong things. And I know I probably shouldn't be saying all of this, but there you go. Tomorrow we will see Notcoin crash. I totally agree with that statement as well. Notcoin will pump and dump tomorrow with few speculators in it to make quick profit. Rug pull loaded. Don't be left holding the not bag tomorrow. I said the same thing in my video there. I am not going to hold my Notcoin token. I'm going to sell it the second I can. And I sold my BounceBit tokens as soon as I could because I don't. Not that I don't believe in the projects. They're not projects for me. And Notcoin is certainly not a project for me. It's a game, and as I say all the time, in fact, I've made a video about 3 projects. So there's a Jupiter vote on the 22nd, and I mentioned it yesterday. And the reason I mention it is those tokens are going to be released in the next month or so, and the winner will probably be listed on the exchange that you're watching now. Watching on now. So you're kind of front running it getting to an exchange. One of the projects is definitely going to make money. It's a cross-chain swap business that already does a lot of business. It's going to do well. So that's going to make money. And of the other 2, I don't think one of them is ever going to make any money. And when I look at Notcoin, I don't see how it makes money. It's an emissions-based game. So it's like, imagine you've seen the American government print 30% of its supply. And what happened? We saw 30% inflation. The cost of everything has gone up 30%. So you launch a token at 2 cents today, and that token will be 0.1 cent within 6 months, and it will go to zero, as close to zero as possible, because there's nobody buying it. There's no point in buying these tokens. Gaming tokens, as far as I'm concerned, are a waste of time and a waste of money. Not tokens of chains which power games, not tokens of applications that have multiple games. I'm talking about game emissions. So if you remember Step was it was an app, it was a token on Solana. You would walk around and it would pay you Step. And at the beginning, people were getting paid $40 to go for a walk. And now people are lucky if they make $1. Why? Because inflation, it just burns through the value of everything. It's an utter waste of time. And there are games out there that I really like, but their token is never going to be worth anything because all they do is emit. You're not going to play a game where you have to spend money every day to play it. You're going to want to play a game where you get paid to play that game. Why? Because you want the token and you want to sell it. So play to earn games fail because they have to pay you to play them. They bribe you to play those games. Look at Fortnite. People pay to play the game. Grand Theft Auto. People pay to play the game. Look at Web3 games. Play to earn. You're earning, but what are you earning from? You're earning from a pool of tokens that over time cannot possibly hold their value. And that's why these not tokens and WAGMI and other ones will go to zero. Whereas Beam, for example, or IMX, for example, which are chains, they take their fees from the activity of those games. So they are money generating businesses, but game tokens are not. And that's where I think there's an inherent problem with play to earn. There's no buy pressure on those tokens. Anyway, let us move on. Let's move on. So I'm just checking some of my comments. Right then. So banking elites may have their fingerprints all over the current anti-crypto regulatory climate, the Consensus founder said in an executive interview with Decrypt. Should that not be exclusive? I think that should be exclusive. I think proofreading has gone sandalulls. You need to have a word with yourself. So Ethereum co-founder Joe Lubin said the hostility goes beyond Biden and Gensler. We're going to actually have to move on quite quickly from this because we've got two things to look at and not a lot of time. So basically, the Democrats don't like crypto. That's the long and short of this. Biden, Warren, Gensler, they're all the same. They don't like crypto. I don't know why they don't like it. Maybe it's because of the threat to the American dollar, potentially. But you've got to ask yourself, aren't Democrats about people? Democrats are supposed to be the party of the people. The Republicans are always supposed to be the parties of the rich and the capitalist state. Now, what's more fitting for crypto? It would fit better with Democrats than Republicans, surely, because Republicans want to control money and control the flow of money and make sure the flow of money is going to them. Democrats are about giving back to everybody. So wouldn't they want decentralization? Wouldn't they want Bitcoin? You'd think so, unless they're not really Democrats. But that wouldn't be for me to say. It might go beyond that. There may be some entity related perhaps to the banking lobby that is behind this. Or maybe we're getting to the bottom of this. Maybe the masters of the government in charge are now saying you need to be bearish on crypto. Maybe that's what they're saying, but I wouldn't want to say that on here. The idea has echoes of what some prominent people in crypto describe as Operation Choke Point. This is something that goes back a couple of years to the point where some papers were leaked. So this isn't hearsay or tinfoil hat conspiracy theories. Choke Point was a concerted effort by the banks to stop the flow of money going from banks to crypto. And it was challenged by some lawyers. And the second it was challenged, they disappeared. And Choke Point kind of stopped and then reappeared in a different guise. So it hasn't gone anywhere. It's just gone a little bit more underground. It's pretty obvious that the United States likes to operate top-down to control as much of the world as it can through especially financial intermediaries, Lubin said. This technology doesn't make guarantees that the bank holding companies will maintain their edge long term, so it may go deeper. Now, what I would say about this is BRICS, for example. BRICS are moving away from the petrodollar. BRICS are creating their own crypto payment solution. BRICS are doing everything in their power to stop America from having control over their business. And by trying to control it, they're actually losing control. And that is the issue, is that America is losing its edge because it is trying to be too controlling. Controlling a free market, which is what they have done for so long, is different from trying to block countries out of the free market based on the American political opinion at the time. And that's what they've done, and that is why you are going to see so many issues in the future. I have to be so careful these days what I say. One day I'm going to do a Rumble stream, and maybe we'll do it from the office, and that Rumble stream will be gloves off. But for now, I have to operate within the confines of making sure I am fair and clear and transparent. Now then, DeFi lender Liquity, I've got it right twice now today. Liquity unveils new stablecoin with user-set borrowing rates. In the white paper, Liquity version 2 will allow borrowers to set their borrowing costs, a novel approach in DeFi, and plans to pay the lion's share of protocol revenues back to liquidity providers. Now, I've also got the website up for this. Very important that you know this. I am not sponsored by Liquity or anything I talk about. Nobody sponsors us. So everything I say is my opinion and my opinion only. Not even Brogan the Oracle's opinion, my opinion. So Liquity, I've found the website. I'm going to bring it up in a second to show it you. So this is the stability pool yield sources. And again, one thing I like about crypto is rather than being the 1980s and having Barclays Bank showing you multiple lines on black and white, they put things in color to show you how it all works. So you can see how it interacts between the stability pool and the troves with collateral and debt balanced off against the deposit. So Liquity's upgraded protocol aims to take on the increasing competition for DeFi yields with plans to go live in the third quarter. So that would be, what are we? Third quarter is July, August, September. So in the next 3 months. The new stablecoin Bold will coexist with Liquity's LUSD, adding liquid staking ETH derivatives as collateral assets to provide liquidity or leverage for investors. Now, I am not a fan of stable coins that are not backed by the US dollar. So if you look at Circle and Tether, PayPal and soon to be XRP, those stable coins are going to be backed by treasury notes, US dollar treasury notes, US dollar yield bearing assets. Anytime somebody says that they are going to use Ethereum as collateral for a stable coin, it makes me shudder. Why? What happens if there is a black swan and Ethereum goes to $200? What happens if Ethereum is hacked and Ethereum goes to $200? Where is the collateral for your stablecoin? You hold $100,000 worth of Tether or Circle. You know in a bank account somewhere they have 100,000 real dollars. If you hold Kabir, Luna happens again, lol. Exactly. If you hold $100,000 and $50,000 of that is held in Ethereum, and Ethereum drops 95%, then guess what? You've only got $52,000. That's it. That's all you've got, because your dollars are backed by a non-US pegged asset, and that is where it is frightening. Now, yes, you hear people say, well, we're going to be over-collateralized. We're going to have 150% of Ethereum, 150% of Bitcoin. That's great until we have the bear market. These things appear in bull markets, and everyone's like, oh, this is fantastic. You know, I put $100 in, I've got $200 worth of liquidity. It's backed by Bitcoin, it's perfectly safe. And then the sky falls in, and then we have the bear market, and Bitcoin falls 50%. And suddenly your 150% collateralized asset is only 75%. And then people sell while you're asleep, and you wake up. And like I said, your $100,000 is worth $75,000. That's the issue that I have with every single one of these, irrespective of how good this product is. If they have a solution where you can dollar peg your investment and your yield, fine. If they back it with Bitcoin or Ethereum, you are in a problem. Look at I covered that coin a few weeks ago. I don't think it was Athena, something like that. And they're paying, what was it, 23% APR on dollars? I mean, seriously, that's Luna 3.0 all over again. That's never going to work. And you have to be careful. If anybody offers you 6, 7, 8% on your USD, and it's a centralized exchange, that is pretty safe, because interest rates at the minute are 5.5%. So it's close to par with what you would get top tier traditional banking. If we're in a scenario where we have 2% interest rates and somebody's offering you 15% APR, where are they generating that yield from to pay you? Because I tell you where it sounds like they're generating it from. It sounds like a Ponzi scheme, and they're paying you your interest from other people's deposits. So always be careful. I am not saying that Liquidity or Liquity is doing that. I'm saying stick to offering or using DeFi like for like. Now let's bring them up anyway. After I've absolutely bashed them from pillar to pillar, let me go and bring them up. Debasing of the US dollar could collapse the US dollar pegged crypto also. No, because you've got the Dixie, which is the US dollar index of how strong the dollar is against pounds, yen, Swiss francs and euros and things like that. So by debasing the US dollar, the Dixie will fall. So the Dixie might go from 104, 110 down to maybe 97, 98. But when you debase a currency and you make it cheaper, you conversely make it more valuable to people buying it. So if the dollar is $1.10 against the euro, and suddenly the dollar becomes $1.30 against the euro, guess what? American stocks become cheaper. So it's a balancing act. It's like a set of scales. So America knows if it debases its currency by 20%, its assets become more desirable, which leads to more income or more, currency moving into the dollar, which then conversely makes it more valuable. And all they have to do is keep that balancing act going. And also don't forget what happens with debasing the currency. You don't just debase the currency, you debase the money in your pocket, yes, but you also debase the debt. People talk about the American debt being $110 trillion, whatever it might be. They've debased it by 30% over the last 4 years. They could debase it by 50% over the next 10 years. So all that debt that they owe becomes meaningless because it's now worth less and less and less and less and less because they've printed more and more money. If I have £100 and I owe you £100, I have zero left if I pay you off. If I print another £100, so I have £200, I still owe you £100. So if I give you £100, I've still got £100 left. But then suddenly I put everything in my shop up by 100%, and suddenly your £100 only buys £50. Does that make sense? So I can sit here and print as much money as I want, and I still only owe you $1 trillion. So if I have 100 times more money, 100 times more circulating money than I did when I owed you the $1 trillion, suddenly you only get the $1 trillion that's worth 1% of what it was worth when you gave me the money. It's smoke and mirrors. I know the American debt can lead to hyperinflation, and that can lead to the downset of the American government, but they are debasing it. And if they just keep the US dollar at a certain strength, it's not going to be as bad as people are making out. Now then, Liquity, which I do not own any, I don't have any, tokens in this. I don't have anything about it. I just found it as I was searching. So let's just make that very clear. I don't have any skin in this game. Liquity charges a small one-time fee to borrow LUSD instead of highly variable interest rates. 110% collateral ratio, I don't find that enough. Under normal operation, exactly. Ethereum drops 20%, suddenly it's got a 95% or an 88% collateral ratio. Unstoppable stablecoin, no such thing as an unstoppable stablecoin. LUSD is a decentralized stablecoin capable of resisting all kinds of censorship. Now, one thing to mention about what I've just said about collateral and Bitcoin and Ethereum. When Bitcoin is a $10 trillion asset, so when it's 8 times bigger than it is now, it will be more and more collateral as time goes by, because the lower the market cap of Bitcoin, the more volatile it is. You go and look at Google, you go and look at Tesla stock, you look at the volatility of it. 10 years ago and compare it to now. Now it moves 1% in its headlines. Back then it was moving 10% in a day. Bitcoin at 10 trillion will not be moving at the rate that you think or you have it moving today. It will move by fractions. So yes, in 10 years time, Bitcoin will be a great collateral asset. You'll be able to get mortgages for your house. You'll be able to buy a car, and you'll be able to put Bitcoin up as collateral. Bitcoin is going to become a yield-bearing asset in the future. Institutions will want to borrow your Bitcoin, and they will pay you maybe 2%, maybe 3%, nothing to break the bank. So yes, in the future, when we are there, when we are established, Bitcoin is going to be a collateralized asset. Ethereum will probably follow suit. Ethereum is going to be $1 trillion asset. Probably in the next 2 years, 3 years, Ethereum will get there, especially with the ETF. So Ethereum could also be a collateralized asset. And by collateralized, you can collateralize everything. What I mean is accepted by big financial institutions. So I'm not saying in the future this isn't going to be a good product and a good solution. I'm saying at this moment in time, we're still very, very volatile. You know, we're talking billions for Ethereum, not trillions. We're talking, excuse me. I think I've swallowed a fly. A second. Poor fly. So, I'm probably deafening you now, coughing. So, I would go and have a look at this. I don't have time because it's now 12 o'clock to go through it in too much depth, but go and have a look at it. It is novel. It's on Ethereum. That's where all the liquidity is. And, you know, maybe you will want to buy into the project. Maybe you want to look at the project. No skin off my nose. I'm not invested in it. I just thought this was a nice, interesting project. You know, you've got different front ends, which is interesting. You've got a kickback rate. You can run your own front end as well, which is also nice. Anyway, go and have a look. Go and check them out. I'm not endorsing them. I'm just telling you I found it a little bit novel. And the other thing with these kind of products is they're a very much of a Me Too product. So somebody on Solana, somebody on Polygon, somebody on Cardano could quite easily copy their business plan. That's another thing to bear in mind is when you're looking at products like that, that might exist in isolation today, but in a year's time, there could be 20 of them. Lido Finance, for example, they could offer this solution tomorrow. Does that put Liquidity out of business? Potentially, if they don't get a market lead, they could be gone in a year's time. So always bear that in mind. Now then, last article of the day. Let me see any comments before I get on any further. Might buy this one. Well, you know, I'm not financial advice. Go and have a look, see what you think. It's not for me to say. Now that fly. I'm not going to need lunch. So, crypto community outraged as court jails Tornado Cash developer for over 5 years. The developer was jailed in the $1.2 billion laundering verdict. A Dutch court has sentenced Alexei Pertsev, a developer involved with Tornado Cash, to 64 months in prison. He was convicted of laundering $1.2 billion in crypto through the Tornado Cash mixer between 2019 and 2022. He's got 14 days to appeal. The ruling in his case could have significant implications for the crypto sector, particularly as the other developers face trials in the US. This conviction has riled up members of the community who are criticising the judgment. The head of security research at Blockfence said the ruling was a sad day for privacy, crypto and open source. He added that the war is not over, privacy is a human right. I do agree with privacy being a human right, and I'm going to talk about this in a second. Michelle Weekly, the director of product development at Byte Federal, opined that the rule showed crypto users either participate in KYC regulation or go to jail. This is the real fight, and we either take down the global banking regulation cartel or we just apply all their laws to the new ecosystem and continue to live under their tyrannical dictatorship. I think this is, I don't know how to describe it without sounding mean. if you made something that was harmful to other people and somebody took it from you and then used it to harm other people, would you be guilty of a crime? That's probably what it comes down to. If you are knowingly building a mixer that is used by 95% of the world's naughty people, are you guilty? And unfortunately, I actually side with the government and the judge on this one. And you cannot create, there's a difference between privacy and abuse of privacy, and this is abuse of privacy. You are creating a mixer that allows people to put money through a system, and when it comes out the other end, you don't know if they've got it or not. And it's money laundering, and it should be illegal. And I don't care about the KYC AML side of things. I care about the fact that the majority of people that use this are criminals, and it shouldn't be allowed. Now, does that mean that the developer should go to prison for 5 years? That's the judge's decision at the end of the day. If that's the law in Holland, that's the law in Holland. If it's the law in America, it's the law in America. But there's a moral issue of, if you create something unwittingly and it's used for bad, then you shouldn't. But come on, 5, 6, 12 of you guys have built a crypto mixer to allow people to wash their crypto so that the authorities can't track you down. I mean, you'd have to be a special kind of idiot to not realize what you're doing, and you're enabling it. So for the sake of humanity and crypto, you should have shut it down. So claiming innocence is not a defense for me. And I know a lot of the things, I'm very pro privacy. I'm very pro protecting your civil rights. But when you build something like this, you need to understand that there are consequences to this. And unfortunately, 5 years in prison. I'm sure in America they're going to get an equal sentence as well. And I'm not saying I don't have sympathy for them, I do. They probably did it with the right intentions at heart. But somebody needs to be sitting in that room saying to them, you're going to go to prison for this because it's too dangerous. AI can be used for harm then? Absolutely, of course it can. And the issue is, who is morally responsible for what is created? Is Ford responsible if somebody uses their car as a getaway car? Is Smith & Wesson responsible for something that happens in schools from time to time in America? And if you create something that can cause harm and you knowingly do it, and you know that 90% of people that are going to use it are going to do that, then I think the authorities have every right to ask for it to be shut down, or there needs to be a mechanism for the authorities to see where those transactions are going. And that's my line in the sand, because it's an abuse of privacy. That's the key. It's not privacy, it's abuse of privacy. And Monero, for example, the privacy token, I agree with Monero as a privacy token. And I agree with Vitalik when Vitalik says that he wants to donate to charities without people knowing that he's donated. And I get that. And that's what Monero is good for. But that's not abusing the system, and this is. And that's why I think that you have to be careful what you wish for. And a fully decentralized financial system is never going to work, because people are going to fall through the holes. Old people, vulnerable people, mentally ill people are all going to fall through the holes, and you can't have it. So much as you see these degens talking about down with the banks, never going to happen. They need to go and get back in the box. It's never going to happen. There's more freedom now than there was 10 years ago, and most of that freedom will still be here in 10 years' time. So enjoy the ride. And on that note, I'm off to make some videos. Thank you everybody for coming today. I hope you had a great birthday yesterday, Kabir. I would have sung you happy birthday, but the last time I sang, my microphone broke, and I don't really want to do that again today. So, with all that being said, I will see you all tomorrow. I am off to make a video about a project called Wolf. Is it Wolf Exchange? I think. So I'm going to go and do that now, and then I will be back tomorrow, same time, 11 o'clock, Central European time. We're going to see what the CPI information comes out today. Expect volatility. In fact, before I go, very quickly, did I see Bitcoin up at 62.7? Or was that my imagination? Did Bitcoin pump on the stream? Let's have a quick look before we go. Remember, this isn't a good day to trade, in my opinion. Let's have a look. Did we go to 62.7, or was that my imagination? 62.5. So we are moving around a little bit. Yeah. Okay. Well, expect that to happen. Expect us to have some volatility. We are going to wick around. We've wicked up to 63, 62.9. We've got to get above 63 and a bit. So take care. I will see you all in the morning. Have a great Wednesday. Remember, it's hump day and it's also CPI day. So don't panic when you see the charts. You're going to get loads of notifications about Bitcoin breaking and falling below over the next few hours. Go out, enjoy the sunshine, walk on grass, whatever you can, and don't worry about today, because by Friday or Saturday it will have blown over. So take care, everyone. See you tomorrow.